Are you confused about whether or not you should trade XAUUSD or gold futures? If you're a gold trader, are you confused about whether or not you should be trading XAUUSD or gold futures? I know this may be a question mainly because last year a lot of traders switched from trading XAUUSD to gold futures. I can understand how this could be confusing, and I was also confused until I did a ton of research, which I'm going to share with you today in order to make the decision for you to trade XAUUSD or gold futures much more simpler. And in this video, I'm going to show you all the research I did so that way you can figure out if trading XAUUSD is the best decision for you or if you want to switch to gold futures. We're going to talk about the hours, the pricing structure of the contracts, whether or not it may be a better cost advantage for you to trade XAU versus gold futures. We're going to get into all of that basically because I had some of the same questions that you may have and probably why you clicked on this video, and then break those things down. And then I'll tell you what I decided to do at the end of this video. Okay, so when it comes to gold futures, the first thing we're going to talk about are the trading hours, because I know when I started trading XAU USD, the hours were a little bit different, especially because they were very different from the stock market. The gold futures market uses COMEX hours, which is basically commodities exchange. And if you look at their regular trading hours, it can be a little confusing. Basically looking at this from 8:20 a.m. Eastern to 1:30 p.m., you may think that this market is only open for a few hours, when in reality, it's not true. If you are tired of missing out on gold, in this blueprint, you're going to get an easy to follow profitable gold trading table, as well as profitable entry levels and strategies. If you've tried to decode things like FOMC, geopolitical events, you may have tried without much success. And in this blueprint, you're also going to master simple strategies that the big players like banks and institutions follow, and then also be able to spot profitable opportunities so that way you could avoid some of the common traps that other traders fall into. And then, of course, you're going to save hours of research with a clear and actionable plan inside of the gold market. Just take a look at what some people are saying about this. So go ahead and grab your copy of the Profitable Gold Market Blueprint today. And when you look at the extended, it looks like it's open pretty much similar hours to what you may have seen in XAU USD. But basically, if you take the regular and the extended, you will see that basically these hours are in these hours. So just focus on these hours. Basically, just keep it simple, but just know that there is an hour break for the COMEX market, just so that way you can make sure that you close positions if you need to, or just be aware of that in case your broker does close you out, which we'll talk more about in the future here. So when we look at Forex, like I said, it's pretty much the same hours, Sunday to Friday, and they also do have some sort of break. Now, this break can vary depending on your broker, so make sure you look at your broker specifically to see how long that break is, but it's typically about an hour. So go ahead and check that out. The next thing we're going to talk about are the fixed versus variable lot sizes inside of gold futures versus Forex. So the contract sizes inside of gold futures are typically fixed. So for instance, if you were to look at Forex, is variable. So the difference there is when you select a gold futures contract, you can only pick 1, 2, 3, 4, 5, and so forth contracts. Whereas when you're trading XAU USD, you could do a percentage of a contract. So for instance, you may have put in 0.1 lot, or a 0.25 lot, or a 0.5 lot. You can't do that with gold futures. You have to do something a little bit differently, and we'll talk about that in a second, but you can't just pick random numbers like you can on Forex. You have to, or with XAU, you have to choose specific numbers. So the minimum size is 1 troy ounce. Which is actually very new for 2025. I actually had to do this video over because of this new information, but it's going to benefit everybody. So here I am, taking time out on my vacation to do this, which I'm very happy to do. Anyway, so if we look at the minimum contract size, we also have 1 lot or 1 troy ounce on Forex, and that's known as a micro lot. So when we go back to futures, we can see that 1 troy ounce is called 1 OZ of gold. So basically 1 ounce. It's basically the same thing, just a different name. When we look at scalability for the gold futures market, you're basically limited by the number of contracts you get and the contract size. So we're going to talk about what that looks like for futures. But basically with Forex, you can type in a lot of random numbers and still get filled inside of the lot sizes when you put the numbers inside of the box. And then accessibility, generally, It requires a larger account size, but with a new Troy ounce, that has changed quite a bit since I did the first video and since last year. So we'll talk about that in a second. But generally with Forex, you can use a smaller amount of money and be able to trade. I think in the past, I've traded with as little as $20 and was able to make a nice return on that inside of the Forex market. So, and then I also have videos here on this channel where I talk about I took $250 and turned that into almost $2,000. And I've done that multiple times. So that's something that's very easy for you to do with XAUUSD. Not saying that you can't do it with gold futures. You just have to be a little bit more strategic and pick the correct contract size.
So one of the interesting things with gold futures is you have something called a tick value, and then in the XAUUSD or Forex market, you have pip values. So it took me a while to really understand what pips were and how they were measured. And it works very similar between the two different markets. So let me talk. In the gold futures market, there are 10 ticks in a point. So that may be a little bit confusing, but we're going to break it down just a little bit more in a moment. But in the gold futures market, it's really important to understand that things are measured typically in points, but 10 ticks make 1 point. So let's go ahead and break it down. So the first thing that's going to be very different on the futures market is basically the contract type. So earlier we talked about the fixed contracts that you have on gold futures, whether it's 100 ounces, 50 ounces, 10 ounces, whatever, they have names associated with them and codes. So the contract type for gold futures, you have the big one that is the standard. And if you're familiar with Forex, then there's also a standard there. I'm getting ahead of myself, so let me just focus on this. But when it comes to futures, you also have the mini gold, which is known as YG. That's the code. And then you have micro gold, that is MGC. That's generally what I trade. And now we have this 1 ounce, which is just 1 OZ. That's the code for that. So you can see the corresponding ounce values there. This is the tick size, basically, and then the value per tick varies. So if you're trading gold, the tick value is going to be different from if you're trading the futures contract version of, let's just say, NAS 100, which is an index, basically all of the tech stocks and more. And then it's going to be different from the S&P 500, which is generally the top 500 companies that are being tracked. Those futures markets are going to have different values per tick. So make sure you understand that for those specific markets. This video is only covering gold. So this is generally what it is for gold. And then the value per point, you can see that there. So it means that every time, let's just take this 1 ounce, because this is very simple. Every tick that it moves is going to be 25 cents. But now that we know that there are 10 ticks inside of a point, we know that if we take this 25 cents, multiply it by 10, we get $2.50. So every time it moves up 1 point, say if you have one contract, one OZ contract, and it moves at 1 point, you make $250. It moves up 10 points, then you have $25. 100 points, $250, and so on. So that's a good way to understand how this works. And if you want to know more, then you can just go ahead and go to cmegroup.com. This is the official website in order to understand more about how these gold contracts work. And then they also talk about other different contracts as well if you're interested in those. So just a moment ago, when I got ahead of myself, I was talking about the XAUUSD or Forex market. So here are the different contract sizes on gold. You have a standard lot that's 100 troy ounces. And then let me move this so you can see just really quickly the differences between the two. So you have a standard and a standard. Then you have a mini lot, which is 10 troy ounces. But on gold futures, this is the micro gold. And then you have a micro lot on gold, which is 1 troy ounce. And then you have the new 1 OZ contract. So you can see how there's similarities between these two markets. And then you have the pip value, which is basically 1 cent per pip. And then the value per pip is going to be 10 cents. So you can see already there's a difference between these two. And then the value per $1 move on gold on a micro lot, which is, really close to this, or it's the same as this, just a different market, you can see how these two things are different. So the way that they're calculated are going to be different. So that's one of the biggest things that was really tricky for me, especially when I was looking to trade gold futures, is trying to, in my head, while I was actively in a trade, calculate what the move would be based on what I was expecting, based on what my take profit was inside of the market. So very interesting. And I put this table together for myself. And this is something that I actually use in order to make sure that I understand the differences between these two markets. So you can go ahead and screenshot this and this, so that way you can have it for later. So each gold contract has a code associated with it, and you have to be able to know what that code is or be able to decipher it in order to make sure that you're getting the right contract. So not only does gold futures have contract codes, they also have month codes associated with it. And in a moment, we're going to put all of it together in order for you to be able to understand how to read the futures contracts. So here are the months here, and you can see that it's every 2 months. So February, April, June, and so forth. And then each of those months have a corresponding code that goes with it, and that lets you know which contract you're actually purchasing. So if we move down a little bit, we can see that the contract structure on gold futures are going to be GC, M, and then 25. So 25 is the year. So just to put this all together, we have a gold standard contract, which is GC, and then we have the month M of June. So we can see that here. And then we have the year 25. So if you put all this together, when you go inside of your broker, you're going to see this code here, this whole thing here, and you'll know which month you'll be purchasing, because you don't, let's just say, for instance, if we're in the month of February right now, and this contract is ending, and let's just say we're on the last day of the month, you probably don't want a February contract. You probably want to go ahead and jump to an April, because that's going to be the new contract that's up, and there's not going to be many buyers and sellers inside of this old contract. And especially if you're trying to get out of a position really quickly, you want to go where the people are, so that way you have someone to sell your contract to inside of the market. So that's why this is probably going to be really important for you as well. So earlier I talked about the data source. So on gold futures, you're going to have one data provider, but for the Forex market for XAUUSD, you're going to have a lot of data sources. And what that might mean is that the charts may look different from one chart to another when you're trading the futures, and if you're trading XAUUSD and you just gotta roll with that. Let's just say we're in TradingView and we want to pull up a gold futures chart. So let me just type in MGC, which is something I like to trade. And you can see right here we have gold futures. And you can't just select this and think that you're going to be good. So you can select it in here, but this isn't the right contract. You can see that there's no contract associated with this. So what you have to do is go MGC, say if I want the micro gold, and you have to hit this arrow, and then you can see all these different contracts. You can see that I already have one that's already selected. So let's just go ahead and select it. And you can also tell that this one's February, this one's April, this one's June, and it follows the naming convention that we just talked about, which is basically the contract name, the month, and then the year. So let's go ahead and select this one. So cool. So now we can see, this here. And if we look at where price stopped when the market closed, and this is a Saturday, if we look at where price stopped when the market closed on Friday, this is now a Saturday when I'm filming this, but you can see that it stopped at 2887.6 on the gold futures market. But if we look at XAU USD, now this is a markup that I did. If you want to find that video, go ahead and find Chart With Me Gold on this channel. But basically, you can see that the market stopped at 2861.82. Very different prices where they stopped. And it's basically because of the gold futures market only has one data source, and Forex has 17 or so markets that is pulling data from. So the chart that I'm using on XAUUSD is Pepperstone. And I bet if I pull up another chart for XAUUSD, it's going to be a different value. Let's just go ahead and do it. Make sure I saved because I really want that analysis. USD. Okay, so you can see all of these different providers of data. So you're going to have different numbers. So I'm on Pepperstone right now. Let's go to Oanda. All right, and you can see that this stopped a little bit lower, so 2861.25, whereas the other one was 0.82. So that's the difference there. So you're going to see that when you compare these different XAU USD charts, and you're going to see a difference when you go from XAU USD to Go Futures. So the best thing to do when you're comparing these different markets is to be on the same time frame. So here I'm on the H1 time frame and I see the shape of the market. And then I go to the futures market. Let me just drag this up. Okay, so then I go to the futures market and I get on the H1 time frame and reset it. And then basically I'm just looking for the shape of it. So I see that we have these two candles. We have a bullish candle and a bearish candle next to each other at the top. And we have the same thing, the bullish and the bearish candle right next to each other right here. So that's going to be the best way for you to really understand the differences between these two markets if you just wanted to do that. All right, so this was something that I was talking about before in terms of the differences between Go Futures and XAU USD. So this is going to be something else that's one of the biggest differences between these two markets. And basically, when we talk about Go Futures, you have something called day margin and initial margin. So basically, the day margin is good more so for day traders, intraday traders, where basically you enter a position and you expect to close that position before the end of the day. And then with initial margin, it's more money that's required in order to hold trades overnight and be able to swing trade basically. So the amount for day margin versus initial margin, usually day margin is much lower. So hypothetically, let's just say it's $500 for Go Futures with day margin, and then you may need $2,000 initial margin for Go Futures. So that's hypothetically. And then the consequence of not closing it out, if you only have enough money for day margin, is your position can get liquidated by the broker because you don't have enough money inside of the market. So let's just say you're in a winning trade. They're going to take you out of that trade, whatever it was at the time they decided to take you out. That's what it's going to be, unless you had enough money for that initial margin to be able to hold that position overnight. And when you're in XAU USD, you don't have those issues whatsoever. You basically just are in the trade until you get stopped out. So in the United States, if you trade futures, this is something that I found and I thought was really interesting. So if you trade futures, you tend to have a greater tax advantage. Now, this is not financial advice, not accounting advice. Go talk to a professional based on your situation. But this is what I found in the research when I was creating this video. But basically, one of the issues that I was having when I was trading XAU USD exclusively was the fact that I had to go to an offshore broker or unregulated broker in order to be able to trade it. Because in the United States, you can trade gold futures, you can trade gold options, but you can't trade XAU USD for whatever reason. But anyway, you still have to report the gains no matter where you're trading from. So it's usually taxed at the regular income rate. So whatever your regular income rate is from your job, that's probably what it's going to be. Now, if you make enough gains inside of your gold trading that puts you into a new tax bracket, then it may be another percentage. Like I said, go ahead and talk to a tax professional. I am not that person. So basically, that's one thing. You have to report it, of course. But then when you trade futures, they have something called a 60-40 rule, where basically 60% of your gains will be taxed at the capital gains rate. And for a lot of people, it's going to be about 15%. It just depends on a bunch of other factors. But 15% versus, let's just say your income rate is, maybe 25%. That's a big difference. Or if you're in a higher tax bracket, like 28 or 30 something, like I am, then it's going to be a big difference. So this is really beneficial here. And then it just depends on your current income and all the other income that you may have. So your tax professional will know what that's going to be for you. And that's something that you could probably talk to them about before you even decide to go the futures route, or even if you're trading XAU right now, that's something that you can have a discussion with them about. But basically, the other 40% will be taxed at the regular income rate. So that's actually pretty cool to have that sort of tax advantage when you're trading Go futures. And that's one of the things that really drew me to Go futures because I didn't know it. But in my research, I was like, what? Like, this is automatic savings, at least for me in my situation, automatic savings. I am building another community on School called the Consistent Profitable Traders. This is a group that is free to join. Basically, I envision having conversations about price action trading. And I do have some things in the classroom here. There will be more educational resources inside of the classroom very soon. And every month, I will have a monthly call where I'll answer questions that you may have about trading profitably. So go ahead and check out Consistent Profitable Traders on School. The link will be in the description box below. And I'd much rather trade Go futures than XAU because of those tax advantages inside the United States. Now, if you're in another country, it may be totally different. So obviously go ahead and research that for your particular country and just make sure that everything is the way that it's supposed to be. But if you are in the US and you want to look at IRS, here is the topic right here. Just go ahead. You can screenshot these websites. That'll give you a lot more information. I thought it was very interesting, and I wanted to provide that for you in this video. And then if you wanted to just read up on this, then go ahead and go to Investopedia, Futures, Taxes, and Trading. Here is the website here. Lots of really good information there as well. And this is like my number one website that I go to when I'm doing research for things. So hopefully it's going to help you as well. And here is another website that I forgot that I had, futures trading specifically. It talks about the form, but then there are other links on the website that you could potentially go to and read more about that as well. So here are 3 websites. Go ahead, screenshot it, save it. And then if you made it this far inside of this video, go ahead and type in the comments, futures. Type this word futures inside of the comment section below, so that way I know that you're still with me and that you are dedicated to this journey. So I want to give a quick summary of what we talked about in this video because there was definitely a lot of information inside of this video, and I think this is my 4th time filming this video due to a number of technical issues on my end. But the number one thing that we talked about was the trading hours, the difference between XAUUSD and Go futures. Essentially, both markets are 25, opens up on Sunday night and closes on Friday afternoon with generally a 1-hour break. So that's pretty much the same. And then we also talked about contract sizes, and we talked about Gold futures having fixed contracts, either 1 ounce, 10 ounce, 50 ounces, or 100 ounces versus the Forex market trading XAU USD, where you could basically type in any contract size inside of the box on your broker and you'll be totally fine. Whereas you don't have that flexibility with Gold futures. And then the pricing and the movements of Gold futures versus XAU USD are very different. So make sure that you rewind this video and take a screenshot of those tables that I created, that I use for myself, in order for you to have those as a reference for you. And the other thing, futures has a code system when it comes to the different contracts. So you have the type of contract, then you have the month code, and then you have the year. And the year is the easiest thing to figure out, but I also have a table for the month codes. So go back and screenshot that for yourself as well, just so that way you have some sort of a reference. And then too, the differences between the XAU USD and the gold futures markets, they generally have different movements because COMEX is the data provider for gold futures. And for XAU USD, you're going to have so many different brokers providing information. So the best thing to do is just to be on the same time frame and then align the movement of those markets in order to figure out what the similarities or the differences is between those two markets. And one of the biggest things and very different things in gold futures is the fact that there's day margin and initial margin that is required. So if you don't have enough initial margin inside of your account, your broker will close you out even if you're in a winning trade, and it just is what it is. So make sure that you know what the rules are based on your contract size and all of that with your broker, especially while trading gold futures. And then the tax advantages, the 60-40 rule, where 60% is at the capital gains rate, which is amazing. So instant savings right there, potentially depending on your situation. So go ahead and check that out and talk to a tax professional, because I am not that person. So if you love this video and all this information, if you want more detailed information videos like this, then go ahead and let me know in the comment section below what you liked about the video. And also let me know if you're a futures trader, or if you're an XAU USD trader, or if you trade both. I'd be interested to know that as well. And I will see you next time.